Alright guys, you guys are welcome to my YouTube channel. This is Coma FX. So I will try my best to use 7 minutes only. 7 minutes. Try my best to use only 7 minutes. Now okay, market structure. Just want to continue talking on market structure. Market structure. So now this is what I mean by market structure. We have two types of market structure. Three, we have the bullish market structure, we have the bearish market structure, and we also have the consolidative market structure. Consolidation, which is the process whereby buyers and sellers are arguing a particular price. That's what we call consolidation. And in the real chart, consolidation is something like this. You see something like this, something like this, something like this, right? The buyers are buying from the bottom while the sellers are selling from the top, right? So if the buying pressure becomes higher than the selling pressure, then we might get something like this to the upside to continue going up, right? Okay, but if the selling pressure is more than the buying pressure, you get something like this. You get something like this to come down. You get to continue coming down. That's because the selling pressure is more than the buying pressure, and the sellers tend to clear liquidity because all of these are liquidity. All the buying and selling points are liquidity, right? All of this liquidity will be cleared first, then before dropping down. You get, so that's how the market works. So still on the market structure. Now this is a bullish market structure. How I take my trade: first of all, I'll first of all check to see the current trend of the market. After confirming in my daily time frame, then I'll switch to my 4-hour time frame. Then from my 4-hour time frame, I'll switch to my 1 minute time frame. Now let's assume that this is my 4-hour time frame, right? From this point to this point is my 4-hour time frame, right? Now in the 4-hour time frame, this is what you see. You see this long, this stretched candle like this. You see this candle like this. But inside the candle, when you switch from that 4-hour to 15 minutes, when you switch from 4-hour to 15 minutes, this is what you see: higher high, higher low, higher high, higher low, higher high, higher low. You get me? In the 4-hour time frame, this is what you see. But in the 15 minutes time frame, switch from 4-hour to 15 minutes time frame, you will see something like this: high and low, high, low, high, low. You get? Now inside this first high and this first low and this high, how do you enter the market? Considering the fact that we are already bullish, we are bullish in our 4-hour time frame. We've seen it that on our daily time frame we are bullish, on our 4-hour time frame we are bullish. So we are looking for a way to join the buy. We are looking for a way to buy, because when it's bullish we look for a buy, whereas when it's bearish we look for a way to sell. Now we've already confirmed that we are bullish. Now how do we join the market? How do we join the market? Now how we join the market is, first of all, you mark your current low and your current high, which is this low and this high, you mark it. Let's assume this part there's nothing like this part here, right? Or okay, let's assume we don't have this part, but understand it like that. So I think I have to do a new one. Okay, remember, from this point to this point, this is your 4-hour time frame, right? Now inside the 4-hour time frame, which is you switch to 15 minutes, you get something like this, then you get something like this. Like you continuously having something like this bullish internal bullish market structure, right? Now when you got something like this in your 15 minutes time frame, what do you now do? You first of all mark your bearish. You first of all mark your low, and then you mark your high, your new high, right? Then you mark your break of structure. You mark the break of structure. Then you take your Fibonacci retracement tool. You check it from here to this point. This is 6 minutes already to this point. Then you mark 50% of this total move. The total move from this point to this point, you mark your 50%. You mark your 50%. Let's check 50%. Okay, look at 50% here. You mark your 50%. Then you remove this noise from there, right? You can change this 50% stuff to blue, right? Now we have gotten a new trading range. Now what are we waiting for now? We are waiting for the market to do whatever it is it wants to do, till it gets to this point, this 50%. The moment it gets to this 50%, remember we are in 15 minutes time frame, but the moment it gets to this 50%, the next thing you do, you switch from the 15 minutes to 1 minute. You switch from 15 minutes to 1 minute. Then this is what you'll be looking for inside the 1 minute. This is what you'll be looking for. So a bearish market structure until you get a change of character, right? Now the moment you get your change of character, you mark your order block. Then you place your buy from this point. You place your buy here, so that when the market, because the market must surely come down to this point, this is the origin that caused the change of character. Because this point is the origin that caused the change of character, the buyers came into the market from this point. It means whenever the market comes back to this place, this point might tend to hold the market. The buyers might tend to push the market higher from this very point. They'll push it higher, right? So this will be your take profit, and this will be your stop loss. This point will be your stop loss. We'll give it a little space to breathe, right? Give it a little space to breathe, and this will be your stop loss. So I think this will be all for now. Thank you guys. Please don't forget to subscribe to my channel so you can get notification whenever I drop any video.